While that strong GDP number we got this morning was fabulous, if you want to get a terrific read on the employment situation in this country, and more important, the strength of the small business community, then there's no better source of information than Paychex. Paychex. That's the second largest payroll processor in the United States, specializes in small and medium-sized businesses. Plus, the company also has an outsourced human resources service division that is growing quite rapidly. Now, Paychex just reported Wednesday after the close, and the company beat Wall Street's earnings estimates by a penny on stronger-than-expected revenues that rose 7.2% year-over-year. Stock immediately spiked. More important, the company's payroll services division grew at a 5% clip. It's the fastest growth since before the recession, with the bulk of the increase coming from higher revenue per check and more checks per client. On top of that, the human resource business is benefiting very nicely from the rollout of Obamacare. Paychex has run up 45% this year, and it's up a quick 13% since we last spoke to the CEO at the beginning of October. Even up here, though, Paychex still sports a 3.3% yield. As the economy picks up, well, I got to tell you, the stock could keep roaring in 2014. Don't take it from me. Let's check in with Marty Musi, the terrific president and CEO of Paychex. Mr. Musi, welcome back to Mad Money.
Hi, Jim. Thanks for having me.
Marty, it happened this quarter, didn't it? This is the breakout quarter that we've been waiting for.
I think so. We're really happy with the progress. Obviously, growth has accelerated, as you mentioned. Payroll service revenue really up twice as much as it was in the first quarter. So we're feeling really good. And the HRS revenue growth was 12%. As you said, 401k and HR outsourcing really strong this quarter.
Were you surprised to see this? And where is it? Is it geographic? Is there certain industries? I mean, because this is such a huge jump. I got to try to understand how it happened.
Yeah, no, it was really across the board. I think, we on the HRS side, 401k has been growing pretty well, and I think we're starting to see it pay off on the revenue side. We went after a larger market, more conversions of existing 401k plans, and that's really paid off for us. And the HR outsourcing, particularly our PEO business, has picked up, I think, because of Obamacare. More people looking for help and assistance on what to do with all the confusion, and that has certainly given us a little wind behind us as well.
Marty, I know you guys were preparing all along for Obamacare, but did you also see the problems with the website coming, and that's one of the reasons why you're at a spike in business?
Well, I think, Jim, we were prepared right along. We have insurance products, some of that being delayed now till January 1st of 15. But we also have the HR outsourcing team in our PEO business that deal a lot with total HR, and that helped a lot with clients. We were prepared. We'd had them trained up, and we have a great compliance department that stays on top of these things and trains our folks. So I think we were able to really get in front of a lot of clients, help them. That ended up certainly increasing our sales a bit in the second quarter.
Well, let's talk about float. There's a guy at J.P. Morgan, just hasn't really liked the stock. He's been wrong, frankly. I'm not going to mention his name, but he says float income no longer a drag. Float income was flat ahead of our down 7.9 estimate on higher balances. Is this something? Is this the beginning of that inflection point too?
Well, I think it really is. We're kind of at about 10 million a quarter in float, and we really think we're at the kind of the bottom of the trough now, where things start to turn as the timing changes now for us. So, and we've seen the estimates. I think interest rates are going to go up slowly, over time, and I think that's going to be good for the economy, and it's certainly going to be good for us. So I think that's got nowhere to go but up.
Now, the stock has had a major move. Is it still the right thing to continue to buy?
Well, our plans are to continue to drive a lot of investor value and to have that stock continue to go up. The market is what it is. You know better than I, but we're going to certainly continue to drive a lot of growth in this business. We're excited about the progress and the acceleration of the growth, and we've got a lot of things going both in the U.S. now and in Germany. We just finished an acquisition. We're starting up in Brazil. We feel really good about our chances for great growth in the future.
We were out west recently, and we pulled up with Workday, which is a very good company, and their software as a service. You've got a software as a service component coming. Will there come a time when you've got to transfer all of your business to the web or to the cloud, or is it fine to be able to have a hybrid?
I think it's, we're moving a lot. We already have a lot of our clients on software as a service now. We have the low-end product with Sure Payroll, and we have our own right up to our mid-market product. And a lot of that's on software as a service now. We have clients who use our very good mobility applications on their iPhones and Androids, and they go online, and they're also talking service at the same time. And even our service givers are on our SaaS offerings. So we're really there, and I think it's always a matter of innovative technology combined with great service. That's what makes the difference.
Last question, Marty. Government seems to be out of the picture. We've got some, let's say, an end of the rank, or at least temporarily, Democrats, Republicans. What else do you think is spurring the confidence that people have to obviously go start businesses, or your numbers wouldn't be as good as they are?
Yeah, I do think consumer confidence is coming back. You saw a little bit of that in the restatement of the spend from the summer that they announced today. I think that as there's more consumer confidence, I also think lending is opening up a little bit. Some of the indices that we're looking at, it shows small business lending starting to open up. And when that happens, I think small businesses start to come back. And, you know, I've said before, we do see housing, new housing, starting to come back, particularly in certain markets like the Southeast and the Midwest. And as that comes back, a lot of jobs start coming around that. And as things, you know, you start to feel more confidence in the government, you start to see housing come back, I really think it's going to start to pick up small business. Well,
this was a huge quarter, Marty. Thank you so much. I'm glad we stuck with you the whole way because it's been such a great ride. And I think it's going to continue to do so right through 2014 because the good stuff's just beginning. Thank you so much, Marty Musi, President and CEO of Paychex.
Thanks, Jim.
Guys, it's been a big win, but it's actually just beginning. Stay with Paychex. Stay with Cramer.